So today I've got a couple of key things that you need to avoid if you are getting a mortgage to buy a home. Welcome to the Dallas Home Show. I'm Scott Neal, the broker of Scott Neal Real Estate in Richardson, Texas, and we help people buy and sell homes all across the Dallas-Fort Worth Metroplex. And if you are a buyer in today's market and you're going to be getting a mortgage, you're not paying cash. If you're paying cash, kudos to you. You're one of only maybe about 15% of the buying public that's actually able and has the luxury to purchase a cash home. But if you're like the rest of us and not independently wealthy and haven't scrimped and saved, made good investments along the way, and you got to get a mortgage, there are some definite things that you need to do to make sure that you don't ruin your chances for getting a mortgage. Now, I made a video a long time ago about one of the many pitfalls that occurred to me when I was getting a mortgage, and it was the $137 mistake that I made that cost me getting a mortgage. And we want to make sure that you don't miss out on your dream home. So I've got 6 key things that you need to avoid when you're applying for a mortgage to make sure that you don't cause yourself any undue or unwanted stress while purchasing that home. And some of these things, if you did them, they could decline you or disqualify you from ultimately getting that home loan. And if you're in the middle of a purchase, that could cost you money. The seller could potentially sue you for not being able to close on the property. A lot of bad things can happen, and it would just be bad for everybody. We're in the business of helping you buy real estate, not get under contract and lose a bunch of money and not ultimately end up getting the home that you want. So let's go through these 6 key things to avoid when you're getting a mortgage. Number 1. Don't deposit cash into your bank accounts before you speak with your bank, or really more appropriately, your mortgage lender. Now, we recommend that you talk to a local mortgage banker who does nothing except originate mortgages all day long. So that means we don't recommend that you go to Wells Fargo or Bank of America or Chase. Stay away from the places that you traditionally keep your bank accounts at, that you traditionally keep your checking accounts, your savings accounts, your money market accounts. Avoid those places for the most part because they're just not experts in originating mortgages. You want to go to someone who that's all that they do. Chances are Wells Fargo, Bank of America, Chase, or something like that is who you're going to end up making your payment to anyway. But a mortgage banker is definitely someone who knows the ins and outs of the mortgage business, and they are incentivized to help you get that loan. So they're going to help you get it in the easiest way possible. And one thing that you definitely need to do is make sure you don't deposit any cash into your bank account before you talk to those people. Main reason why is because they have to source where all of those funds come from. And they're going to be asking you a lot of questions about where did that cash come from. You know, they got laws about who can deposit cash, and that raises red flags for a lot of people. And if you deposit cash without getting the okay from your mortgage company, that could really disqualify you from getting a loan. Let's move on to key number 2. Number 2, don't make any large purchases like a new car or furniture for your home before you ultimately get qualified and close on that loan. Here's the reason why. Again, just like a home, a lot of people, they don't buy those cars or that new furniture. They don't buy cash. A lot of people finance that stuff. And when you finance stuff, that ultimately throws off your debt to income ratios, and it could ultimately disqualify you from getting the home that you really want. Even if it just disqualified you or brought your overall purchasing power down by $10,000 to $20,000, that could totally skew a deal that you had under contract, because the seller might not be willing to drop the price just because you can't get qualified, and you might not have that extra $10,000 and $20,000 sitting around that you can put into your next home purchase. So definitely avoid making those large purchases, and definitely avoid financing them if you possibly can. Much better to just wait until after the transaction is funded. Then you can do whatever you want. The deal has been done. It's a fixed rate mortgage is what you should be getting, and that's not going to change. All you have to do is just make sure you make the payment from there. How about key number 3? Number 3, don't co-sign other loans for anyone. My goodness, you probably shouldn't do that anyway. We certainly don't recommend that you co-sign for family members or friends or your kids. If you can't buy a property, if you can't take out that mortgage and service that debt on your own, it can only cause problems. Rarely have we seen that just work out splendidly for everyone involved. Usually someone ends up getting upset, and so we just recommend that you don't do that. And just like not making one of those big purchases for a car or furniture for financing it, when you co-sign on a loan for someone else, you are on the hook for that debt. A lot of people don't really realize that when they're co-signing for, we see this with a lot of people who co-sign for uncles, aunts, sisters, brothers, and kids mainly. When people co-sign for something like a student loan or a mortgage or a car for their kids, they don't really realize that those people are fully on the hook for that debt, and that will all go against you as well. So let's just say, for example, you co-signed on your daughter's new home loan, and that new mortgage is $1,200 a month. The mortgage company is now going to count that against you, and that can ultimately mess up your debt to income ratio. So do not co-sign on anybody else. Tip number 3. Number four, don't change bank accounts. So we highly recommend that you just, maybe you can see a theme here. The basic theme here is don't do anything except get that mortgage. So don't change bank accounts. That sends up more red flags like depositing a lot of cash. And you don't want the mortgage company, the underwriters at the mortgage company asking you a lot of, why did you do this? What's going on with this? It just makes it a whole lot harder to figure out what is going on. And it's much better for you to just do that way ahead of buying a home or after the transaction is over. Just get through the transaction, let the loan fund, and then change things from there. Let's move on to tip number 5. Tip number 5, don't apply for new credit. Now, there are some caveats here because we know, and the Fair Isaac, the FICO score, the Fair Isaac credit reporting system, they have in their algorithms, we're pretty sure, that they know that you're going to be shopping around for credit. And so if you are going to shop around for the best mortgage rate or the best lender, maybe you're going to talk to 2 or 3 different lenders, that's typically okay, but you need to avoid trying to open up other types of new credit lines. For example, don't go apply to get a new car when you're also trying to buy a mortgage. That really does fall under tip number 2, like don't make these good new purchases. Don't try to open up new credit cards. Don't try to go get a line of credit at the store for that new furniture. Wait until all of that stuff is done. Wait until your mortgage is completed before you go trying to take out new lines of credit, because it's not going to help you. It is going to hurt you. Again, it's just going to alter those debt to income ratios, and you really need those to be super clean. And this leads us on to the 6th and final tip. Tip number 6, don't close any credit accounts. And so this might sound a little counterintuitive because you might think, well, hey, I'm getting rid of this other credit card that I'm not really using. It's going to take my balance down, and that's going to show that I don't potentially have as much credit going on out there, and the bank might look favorably to that. Again, this sends up weird red flags to lenders about your credit worthiness, and they start asking a lot of questions about, like, why would you close that? And you just really want to avoid these major changes in your credit profiles and in your overall bankability is what we would call it when you're getting a mortgage. Getting a mortgage is not super easy. So if I'm talking to you and the last time that you did a mortgage or purchased a property was before, say, 2007 and 2008, the game changed in 2008. A lot of new regulations, a lot of ifs, ands, buts, and maybes, and here you goes. You gotta really have all of your financial house in order to make sure that you get that mortgage closed and that you get the best deal on it, and that you don't potentially end up screwing up a deal that you're in the middle of and ultimately potentially miss out on your favorite home. So that's just a couple of tips that we think that you should keep in mind, ways to avoid totally crashing your mortgage experience. So if you're thinking about buying a home, we certainly recommend that you get fully qualified for your next mortgage before you get out there and start shopping. There's a whole lot of reasons for that, and we'd love to talk with you a little bit more about that. So call one of our experts here at our office. Our number is 469-998-3322, or you can visit us on our website at mydallashomefinder.com. We look forward to working with you soon. Happy New Year, and watch out for your mortgage stuff. All right, see you later.